Good morning, everyone, and thank you for choosing Market Briefing, market analysis, and financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial news, June 24, 2023. In the international equity markets, Asia is gearing up for early gains, with Japan's stock futures leading the way with a promising advance of over 1%. This positive momentum follows reports that officials at the Bank of Japan do not perceive an urgent need to address the side effects of their ultra-loose monetary policy. Despite a 2% weakening last week, the yen has seen little change, likely influenced by the BOJ's announcement. Major currencies, on the other hand, are trading within narrow ranges against the dollar on Monday, indicating a relatively stable currency market. However, investor caution prevails as they await the opening of the Chinese market. Futures for Australia's benchmark indicate a rise, but Hong Kong's futures experienced a decline. Additionally, US-listed Chinese shares saw only a marginal increase, adding to the air of uncertainty surrounding the Chinese markets. In the US, the S&P 500 futures dipped slightly after closing mostly unchanged on Friday, while the Nasdaq 100 futures rose marginally. Nonetheless, technology companies continue to face selling pressure following disappointing earnings earlier in the week. The upcoming week is a crucial one for investors as they closely monitor earnings reports and central bank decisions. Some heavyweight U.S. companies, including Alphabet Incorporated, ExxonMobil Corporation, and Meta Platforms Incorporated, are scheduled to report their earnings, which could have significant implications for the overall market sentiment. Similarly, investors in Asia are keenly watching companies like Samsung Electronics Company, Rio Tinto, and Hitachi Limited. Central banks' decisions will also play a pivotal role in shaping the market's trajectory. The Federal Reserve and the European Central Bank are expected to raise interest rates and provide signals on further hikes, reflecting their efforts to address inflationary pressures. However, the Bank of Japan is projected to maintain its current stance, allowing the rate gap with other central banks to widen as it awaits sustainable inflation. The Chinese markets are focused on potential government stimulus ahead of a Politburo meeting. Global fund managers hold low expectations, as Beijing aims to boost growth without creating asset bubbles. Despite efforts to bolster consumption and businesses, Chinese stocks faced their worst week in 4 last Friday, reflecting the ongoing challenges in the region. Moving to the bond and commodities markets, the 10-year U.S. Treasury note saw a slight downward edge to 3.83% on Friday, maintaining relative stability for the week. Similarly, the 2-year Treasury yield showed little movement, staying at 4.84%. Yields on Australian and New Zealand government bonds also displayed minimal change during early Monday trading. In the commodities sector, wheat futures dropped as Ukraine prepared to continue a grain export deal after Russia's exit, potentially impacting the global grain market. Meanwhile, oil prices declined slightly after recording their 4th consecutive weekly gain, signaling potential tightening in global markets. Gold, however, opened the week with little change, having slipped against a stronger dollar on Friday. In India, investors are closely monitoring the GIFT Nifty, which remains steady at 20,036 at 5:33 a.m. The Indian benchmark indices faced a decline after 6 days of positive momentum, with the S&P BSE Sensex closing lower by 887.64 points, 1.31%, at 66,684.26, and the NSE Nifty 50 declining 235.75 points, 1.18%, to end at 19,743.40. On the currency front, the local currency strengthened slightly against the US dollar, closing at 81 rupees and 96 paise on Friday. In the Indian equities market, overseas investors turned net sellers, offloading stocks worth 1,998.8 crore, while domestic institutional investors took the opposite approach, becoming net buyers and purchasing stocks worth 1,290.7 crore on Friday. This contrasting trend suggests a cautious sentiment among international investors compared to the more optimistic approach of domestic institutions. Moving to the US and European markets, last Friday's close saw mixed results. While the Nasdaq Composite experienced a slight decline, the Pan-European Stoxx 600 saw a rise of 0.3%. Notably, the gains in the Stoxx 600 were led by household goods, which recorded a notable increase of 1.2%. The positive momentum in the European markets might have been bolstered by the news of higher-than-expected retail sales in the UK. June's numbers showed a rise of 0.7% month-over-month, surpassing the earlier estimate of 0.2%. Before proceeding with our analysis, we would like to remind you that your support is very important to us. If you enjoy this video and find our content helpful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and provide you with even more quality content. Now, let's get back to the news on the financial markets and the latest updates. In the technology investment space, Cathie Wood's ARK Innovation ETF underwent a significant shift in its strategy, exiting stocks generating revenue from China. Notably, shares of companies like Tencent and K Holdings were sold off. Instead, the fund further consolidated its holdings in Wood's favorite bets, such as Tesla, Coinbase, and Roku. This strategic move has paid off handsomely, with ARKK gaining over 50% this year, reflecting successful investment decisions amid a dynamic global market landscape. On the oil front, there's a potential for surge in prices during the second half of this year. The Secretary General of the International Energy Forum, Joseph McMoneagle, highlighted that India and China combined will contribute to a 2 million barrels per day increase in demand during the latter part of 2023. However, McMoneagle also expects that OPEC Plus will respond to this big supply imbalance, which could temper the price surge. Finally, let's touch on the recent decision by Foxconn to withdraw from a semiconductor manufacturing joint venture with India. This highlights the challenges for new players entering the chip-making industry, where high barriers to entry, such as a lack of specialized labor, reliance on third-party technology, and intellectual property hurdles, make it difficult for competitors to challenge the market dominance of established players like TSMC, which currently holds a commanding 59% market share. As we look ahead to the week, it promises to be fully packed with a slew of economic data releases and earnings reports. The Federal Reserve's meeting to decide on the path of U.S. interest rates will be a key event to watch closely, as it could have a substantial impact on global markets. As always, analysts and investors will need to position their portfolios strategically to navigate this busy and eventful week. Key events this week: Eurozone S&P Global Manufacturing and Services PMI, Monday. UK S&P Global, SIPS UK Manufacturing and Services PMI, Monday. US Conference Board Consumer Confidence, Tuesday. US New Home Sales, Wednesday. FOMC Rate Decision, Fed Chair Powell News Conference, Wednesday. China Industrial Profits, Thursday. ECB Rate Decision, Thursday. US GDP, Durable Goods Orders, Initial Jobless Claims, Wholesale Inventories, Thursday. Japan Tokyo CPI, Friday. BOJ Rate Decision, Friday. Eurozone Economic Confidence, Consumer Confidence, Friday. U.S. Consumer Income, Employment Cost Index, University of Michigan Consumer Sentiment, Friday. Some of the main moves in markets. Stocks. S&P 500 futures fell less than 0.1% as of 8:01 a.m. Tokyo time. The S&P 500 was little changed Friday. Nasdaq 100 futures rose less than 0.1%. The Nasdaq 100 fell 0.3%. Nikkei 225 futures rose 1.4%. Australia's S&P/ASX 200 index futures rose 0.4%. Hang Seng index futures fell 0.5%. Currencies. The Bloomberg Dollar Spot Index was little changed. The euro was little changed at $1.1130. The Japanese yen was little changed at 141.72 per dollar. The offshore yuan was little changed at 7.1884 per dollar. The Australian dollar was little changed at $0.6727. Cryptocurrencies. Bitcoin fell 0.4% to $30,024.57. Ether fell 0.5% to $1,884.20. Bonds. The yield on 10-year Treasuries declined 2 basis points to 3.83% on Friday. Australia's 10-year yield was little changed at 4.01%. Commodities. West Texas Intermediate crude fell 0.6% to $76.59 a barrel. Spot gold was little changed. In conclusion, we'd like to thank you for watching Market Briefing, market analysis, and financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more interesting news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.